U.S. stocks yesterday cut some of their losses after the Federal Reserve suggested that recent economic data that was weak was just a blip, and it did confirm it was on track to raise interest rates this year. Let's talk about this as well as this earnings season that we've been seeing. David Nelson joins us. He's the Belpointe chief strategist. Good to see you.
Thanks for having me.
We've had this dichotomy, if you will, earnings growth with an exception in a way of Apple and Facebook. Great numbers, but somewhat disappointed investors. Earnings have been strong, but the recent economic data has been weak. What does the Fed do with that going forward?
Yeah, I think, look, the first quarter has been tough really for several years now, so I think it's an aberration. I think they're going to take that in stride right now. I'm not sure we're going to get all the hikes that people expect right now. The gold markets are saying that we are. I'm not so sure. The data has been a little bit soft. You could drive a truck through the soft data and the hard data right now. That has to get a lot better.
What do the markets do? June is expecting a rate hike. What if we don't get the rate hike? If we do get the rate hike, where do the markets go?
If we don't get a rate hike, the market will go down on that because it'll be the perception that there's something the Fed sees that we do not. And if we don't get a rate hike, the bonds go higher. That's kind of the Armageddon trade. So that would be kind of a negative.
Apple took the market down, particularly the NASDAQ down yesterday because, look, their iPhone sales, their $53 billion in revenue just wasn't enough. Is Facebook going to do the same thing today? Because shares are looking soft right now. Yeah,
you know, it was a stunning quarter, and it's hard to say. It's hard to say anything bad about a company that grew revenue over 50%, or about 50%. Pretty decent numbers. But, you know, stocks are forward-looking mechanisms, and a lot of that is priced in the shares. And frankly, this is a stock that really ran hard into the number. And reversion to the mean is a pretty powerful tool on Wall Street, pretty powerful metric. I'm not going to be surprised to see it pull back to about the 50-day moving average. There were two flaws in the report. First was that expenses are going higher. It's pretty clear they're going to be spending a lot more money. And ad revenue growth, that actually slowed sequentially. So those are two blips in the quarter, but it's still a pretty attractive stock.
How about Tesla? The shorts have gotten crushed on Tesla, betting to the downside, and it's been a stock that's been soaring under some pressure today. Your thoughts on Tesla?
Look, I get it. I get the bull case. I mean, this is one of the great salesmen of our time, and it's truly an innovative product, but it's pretty tough to make the numbers work. But they frankly just don't seem to matter for this company. This company raised about $1.25 billion just a few months ago. That's already half gone. They're going to have to come back to Wall Street, you know, sometime real soon to re-up. I don't see this company's not going to make money on a GAAP basis until about 2020.
Yeah, and we're still struggling to figure out exactly what type of company they are. Auto, technology, all of it.
Well, Elon will tell us.
He will. David Nelson, good to see you.
Thanks for having me.